the cycle is really trying to understand where in the cycle to get in. And that's usually the hard part. We never know really when to get in and how to get in. So today, I will be focusing on, a lot of the technical parts of the stock market. Um, so first, I'll go through the usual introduction. First off, I'm not a financial advisor. Everything that I share is purely for entertainment. So if you get any type of information that you feel like has benefited you or has not benefited you, really, I don't get paid for this. This is not something that is only entertainment.
Airspace and
That being said, the entertainment value that I've learned from watching the market will
automotive
be displayed
eccentrics.
where we'll go over some
Chemical eccentrics.
will be coming out for this upcoming week.
Structure.
Look at the technical charts and then specific stocks to watch
Consumer
that
production.
I feel that might or should benefit you
Energy
for the week.
duties, etc.
Going on.
Services.
Next, I have a process to all of this. I'm not chasing charts. I'm not chasing for money. What I am chasing is the process where you can get into a stock, and for about an hour of that time that you're in that stock, you have an opportunity to potentially pick up $300 on the day. That is the process. Not chasing, but just looking for what type of charts, patterns that you need to look out for in order to be able to find these opportunities, because these opportunities are always there. I'm usually there early, and but by the time I alerted to people, they already are ready to prepare themselves to cash out on the trade. So that's typically really good. Um, so that's why I said we don't chase the money, we're just chasing the process. So there's like this whole ODA loop that I came across where it really helps to like get an understanding of the analysis or just how to synthesize all the stock market information that you're going to get at one time. Um, I'm not a day trader. I do look at the chart. So there's a difference of really identifying who you are as far as if you want to, if you're trading for the short term, if you're trading for long term, what is the actual plan that you want to have, right? So when you're looking at a chart, you want to look at implementing this ODA loop. So this ODA loop really begins with observing what you're seeing, right? What are these the information, the circumstances of what's happening? What does the market look like? What is the Dow saying? What is the S&P saying? What is, are there any political news that seems like it might disrupt, whatever industry that you might be thinking about investing in? And then once you find out all that informational like feedback that you're getting, then you orient yourself. You start to synthesize what information is really good and what isn't. What was said in the past versus what is being said right now currently about this individual company, stock, what have you, right? And that's where you'll probably have to go and look on the SEC filings, probably go to Twitter, because there's always a lot of chat on Twitter, maybe even Reddit, to get a lot of this information. And then you have to figure out to decide what you want out of this company. Is it something that you want to hold for a day or two, or is it something that you're looking to hold for 3 months, 6 months, maybe even 2 years out? Like, you have to come up with that type of decision in a matter of minutes if you're trying to get in with a good entry, because there will be some entries that you probably have gotten in, but if you waited too long, then you probably would have missed out on significant upside. And Palantir will probably be an example of that coming on into this week, where they were at $28 a share or $25 a share because of bad earnings. But I'm not going to get into all of that. But they might actually go higher. But we'll get into that later. And then you act. You want to decide on whatever it is that you just decided on. You want to now implement. I'm holding it now for this long. Because I'm holding it now for this long, I'm not even going to think about it for the next 3 months. Right? We'll come back, visit it 3 months, and then we'll see what my profit look like, or look back at it in 2 weeks. So whatever the time frame that you're looking at. All right. So there's this general like phase. And this phase you will see all the time. It's called the Wyckoff phase. And this phase is where you just have this gradual gradual uptrend of a stock, right? Where you'll see it on a technical chart where you'll have higher highs and then higher lows. So you'll have a high right here and then there's a higher high right here. There's a higher low right here and then there's a higher low right here. So you'll see that these higher highs and higher lows are continuing up the side of the onto the side of the chart. And then it hits a period where it starts to consolidate on price, right? So the price will just consolidate here until the stock makes a decision if, you know, if there's no news or, you know, the volume starts to lack. Like, you know, once the company starts to have less interest in the stock, then the price tends to drop. And, you know, if there's no news or, you know, bad earnings or what have you, you will have a stock come down and it will make lower lows and lower highs. And, you know, that's the genuine or general trend a stock will tend to make anytime it's trading on the market. Now, this is when a stock is going from the upside and then it's coming down on the downside. So you also have the reverse of that. So when it comes down on the downside, you start to see like, oh, okay, well, it's, you know, even though it's still coming down, making higher or lower lows and lower highs, it's still coming down, but it's going to hit an opportunity where we call support. And that support is where you now have, you know, that demand of people who actually are interested in this stock is overloaded. So now it hits this, we'll say, relative bottom, and then we'll consolidate on that price again, consolidating to that price where, you know, where you'll see resistance. That resistance is that overhead of general supply. So, you know, the amount of supply that is available in the market, and we'll go over that when we're looking at the actual statistics of a company when we discuss float size. And then after it consolidates, it will tend to break out. You know, once you have enough volume, you have good news, some type of catalyst that will allow this, the stock price to go up and do that same thing that we just saw, make higher highs, higher lows, all the way up on the upside. So with that being said, how would we even look at the upcoming week? How do investors know what to invest in the upcoming week? What do traders even look at when they're trying to come in to this upcoming week? Like, where do you even start? You're brand new. You're like, I got this trading account. I put in $200. I want to, you know, see what I can do with this, you know, $200. Like, okay, great. So now you started to look at like, what companies do I need to look at? So on Monday, the market opens up. If you're not aware of the market time frames, at 4 a.m. Pre-market, if you have Webull, you're able to get access to the market at that time at 4 a.m. But if you have Robinhood, if you have Thinkorswim, Thinkorswim, which is under Ameritrade, what is the other one? Charles Schwab. You're not going to get in. You're not going to have availability to buy or sell a stock at 4 a.m. We'll get to why that becomes a significant thing to understand once you're trading on the regular day. 7 a.m. is typically what a lot of these brokerage have available for people. So if you have E-Trade, if you have Thinkorswim, you know, Webull still, you know, 7 a.m., that's still pre-market, you're able to buy and sell a company, an exchange. The market becomes openly available for everyone at 9:30. So 9:30 until 4 p.m., that's when the market is open for everybody. You know, retail investors, institutional investors, but all the institutions are usually moving their money somewhere around 4 a.m. When the market closes at 4 p.m., then you have after hours, where once again, institutional investors have an opportunity to move a stock. When this happens, it's usually because of earnings. So pre-market, you see on Monday, we have Royal Caribbean. That's one that I highlighted. Royal Caribbean is, one of these stocks that has been like, heavily shorted because there's no one that's really trying to travel really like that. But as everything is starting to open up with all these vaccines, we're going to have an opportunity for Royal Caribbean. That's not the one I really wanted to get into. There's a lot of communication stocks that I have highlighted here. So when I think of, heading into the following week, I look for a general theme of what is really being traded during the week, or what earnings are coming out during the week. I apologize. What earnings are coming out during the week? So because these earnings, you start to see that a common theme that like Dish, Discovery Network, Magnite, what was the other, Viacom, AMC. These are all like communications, entertainment. You said, okay, then maybe I need to start looking at entertainment. I need to start looking around at that area, see what that's about. You know, and then also the ones I don't have highlighted are some of the retailers like TJ Maxx, Crocs, Macy's. Some people would say Home Depot will be still a retailer as well. That's another general theme that you will see that, okay, retailers are also trying, they're playing their way in the market. We have Wayfair as well. I think there was another retail company that's supposed to be coming out with earnings. I'm not sure which one, but either way, Overstock. Sorry, there it is. So you have these, you start to see a general theme. Okay, well, with communications, there's retail, so keep my eyes open for that. We also have some technology, like cloud computing, like with Big Commerce, Zoom Info, Palo Alto. What was the other? There was another one that's in cloud computing as well. I wish I highlighted it to make it a little bit more simpler for everybody. But you start to look at what the general theme is for the earnings that are coming out. So like we did last week, we did Palantir when we wanted to break down how their earnings might go because we looked at their history. So we'll probably do the same thing with another stock here. And I'm kind of leaning toward, because I'm leaning on communications, I kind of want us to break down like Dish or Discovery, since that is the very first, like probably Royal Caribbean as well. But since those are going to be the first stocks that actually come out with earnings tomorrow morning, it'll be just kind of good for when you like wake up and then you can see like, okay, well, how did Royal Caribbean really do like after we analyzed it on Sunday night, right? And so what I'll do now is that we'll share the actual chart itself, and we will go to Royal Caribbean first. So, actually, I know Fitz is on the line. So I did my 15 minutes. I said, I'll speak on those things, but we can just real quick highlight on Palantir first, because that's the one that we did earnings on last week. And last week we said that, institutional people want to get this stock in at an opportunity at the lowest price, right? And they had their opportunity during earnings. Now, as a general theme that has been happening so far this year, when any company comes out with earnings, the stock price has been drops. That's just a general thing. So I feel that anyone who comes out with earnings, my very first instinct is going to say is that they're going to drop in price. And then that will give you an opportunity as a long-term investor to say, hey, after looking at their fundamentals, maybe that they're extending their branches of, investing into companies outside of the government, maybe that this stock will become something that of a higher price later on, maybe in 2 weeks, maybe in a month, but something that you can look at long term. And that's what's been happening with a lot of stocks after earnings. So Palantir was no exception. The stock price dropped on down. And what you're looking at right now is just the chart. It's the chart itself. So we're going to apply OTA, what we did before, right? So we're going to observe on the chart what we're actually looking at. I drew in some red lines here because that signifies like support and resistance at a certain price point. But I want you to key in on these like green lines. The green line here, this teal line here for the moving averages. There's no 200 moving average on this stock, but I'll do that with another stock. I'll do it with the 200 later. But we want to, when we're looking at the moving averages, we're using the moving averages as a means to give us an idea of what the price point might be after a certain number of days. So the green line right here gives us a price on this y-axis. And it says that it's 28.69, right? The teal line gives us a price point on the y-axis still right here. It's a bubble and it says 33.04. So I use these moving averages to see what if the green line continues to trade higher and crosses over the teal line, then the price will only go higher. So I'm gonna say that again. When you have this green line, the green line, and if you have pen and paper, please write this down, it's the 5 exponential moving average. The 5 exponential moving average is a moving average that's just a general calculation that says this price is going to be at this price point in the next 5 days. When you compare that with the 20-day, which is this teal line, the 20-day simple moving average is just saying that this is a general average price that this stock might be at 20 days from now. But what tends to happen is when the stock price trades over the 5 exponential moving average, the price goes higher. And then once it goes higher and the price or the 5 exponential moving average price crosses over the 20 simple moving average price, and the stock price is still above the 5 exponential moving price, that's 3 different price points I just gave you, the price always goes higher. And you see that with an example here. If we look right here on January 22nd, once the stock price had volume, which was another catalyst that it needed, and it closed above this green line, which is the 5 exponential moving average price, it went higher the very next day. Now, the next day after that, yes, it had some pullback, but the price still closed above the 5 exponential moving average price. And then it had one more day where it could go higher, which it did, because it traded the day before above the 5 exponential moving price. It went higher, went to an all-time high. So the general rule of thumb, which if you have pen and paper, you should probably take this down. Anytime when a stock makes a new high, the price point is always going to pull back. That happened here with Palantir. They're always going to pull back, and then we use other indicators to confirm this as well. So the other indicators are the MACD, which is the MACD. It's a moving average, not moving average. It's a momentum average, and it just tells the relative momentum, how strong a stock can actually move up higher. And then we also use the RSI, the relative strength index. And that RSI tells us if a stock is overbought, which it will turn a different color on your trading platform, if it's overbought, or if it goes oversold. If it goes oversold, the RSI will be on this side and it will be a totally different color. It would be like blue. And then we also use the TTM Squeeze. The TTM Squeeze is another momentum indicator that lets us know that if the stock price shows on the momentum indicator that the histogram is over the 0 or this x-axis, this 0 line, if it starts trading above that 0 line, it has more momentum to go higher, right? It's there to help confirm. And then also down here, I have the volume for the day, because we need to know, the the volume. Like if it's a green day, that means that there's a lot of buying. There's a lot of people trying to get in. If it's red on the day, that means there's a lot of selling. And sometimes the volume will be low because there's no real interest in the stock. Only people that are betting against the stock, which are called short sellers. So that's how we orient ourselves with the actual chart itself. And then once we do that, we start identifying where support and resistance are. So that's what we did with Palantir last week. So when you see this now, where it comes with Palantir, I believe, of course, it's going to be a buy because the price is now lower. If anybody bought at support, which is $25, generally, and why I say it's support, because the previous days back in January, it was around $24, $25. If you go back, still back in December, same around $24, $25, same back in December and back in November. So that's where people say, you know what, we like anything above $25. There's a strong demand for it there, right? So that's what the stocks really do. It just gives you a range, and you have to be able to use these indicators to help identify where the range is so that you can get in at a good price. So I know we said that we're going to talk about a stock that's going to come out with earnings for tomorrow, which is Royal Caribbean.
Hey, Jermaine, can I ask a question?
First off, do we have any questions of anything that I've mentioned so far in the past 23 minutes?
Yeah, I have a question. Hello, Jermaine? Yo.
Yeah, go
I
ahead.
can't hear anybody.
Can I hear anybody?
No, now I can hear you. I'm so sorry.
Oh, cool. All right. What's up, man? So if we're looking at the stock we're just looking at to Palantir, you're saying it's good to buy it now because it's regressed back to a price it was in January, and it's projected to rise again because it's showing flashes of that throughout past weeks, right?
Correct. Correct. So now that we're in the present, right, on Thursday, it found some support right here at this like $24, $25 area. So when we use the moving averages, we're using that green exponential moving average with the stock price itself. So we're saying that if this candlestick starts to close above the 5 exponential moving average price, then chances are it's going to want to test the 20 simple moving average price, which that it tends to do. It wants to test that price, which that price is at $32. So tomorrow we might see that the price might go to 20 or to $32, and it might pull back. If we look at it from different time frames, which the time frames I tend to look at are I go from the day chart, or the daily chart, which we were just at, to the hour chart, to the minute chart. And why I do that is because, when I look at the hour chart, it gives us an idea of what the stock might have been doing during these pre-market after hour times. Those times where those institutional investors get in, the people that are in at Webull, who wake up at 4 a.m, who don't sleep and want to jack up the price during times that you have no accessibility to the stock price. Right. So if you have a Webull account, that will be more beneficial to you. If you have a Robinhood account, you're pretty much out of luck because you don't get access until 9. So who knows what happens in the 5-hour time frame. So that's why hours I use, and that becomes essential. But also another reason why I'm suggesting that the price will go up higher is that when we do reduce it to the hour time frame, remember on the daily time frame, there wasn't this red line here. This red line is the 200 simple moving average. So that 200 simple moving average also has a price point. So that price is 32. I don't know why it's not showing. Hold on, let's get you to show. It's not showing the price. it should show the price now. Yeah, so the price point is 32.25. So what happens technically, and you'll have your opportunities to watch the market and look at it from different time points. But what tends to happen is when these moving averages start to cross on any time frame, that means that the 5 exponential moving average, the 20 simple moving average, and the 200 simple moving average, when they cross, the price tends to go up higher. And if we'll go back to an example, what it did before, back what Friday was this? This was February 5th. So, February 5th, the moving averages started to cross. And when they crossed, they just went up higher. So, you could have had a day where, you got in on Friday morning at 8 a.m., probably 9 a.m., got in at like $32.50. The moving averages have crossed, and you could have just rode the wave until Monday, 9 a.m. to $38. So that's a $6 move that you could have had right there in just a day,
And
right?
this squeeze, look at this squeeze at the bottom.
Correct. So even Fitz is pointing out there's a squeezes. So when you have the crosses on the MACD, that also shows that there's some upside. And we always use this x-axis, this 0 line, as a means of like, this is where it's bullish sentiment up here versus this is where bearish sentiment, like meaning that people want to drive down the price, drive up the price, drive down the price. So we see the same thing on the RSI. People are driving up the price, it's becoming overbought. And then even on the TTM squeeze, it was consolidating for a while. That's what this red, x-axis is telling us right here. It's just consolidating until we get some histograms that are showing some teal, and the 0 line is turning green. So that means that there's some buying that's going on as well. And then another indicator that I'm starting to use now is this implied volatility. I was reading these books on, options trading, and Fitz brought it up last week. Said, make sure that you do the implied volatility, because we weren't adding that. So, thank you, Fitz, for bringing that up. And saw it but that was really, really good too. So it just extra confirmed that we're all on the same path of trying to, create success for each other. And I love that. So this is what I'm anticipating. I don't know if it's going to happen tomorrow, where you have Palantir, all the moving averages cross on Monday morning. I don't know, but history says that when these moving averages cross, like it did back here, January 22nd, did the same thing. The moving averages crossed and it went up higher, and all the technicals match the same indication that it was going to go higher. So in price,
the sentiments is good around it too.
Yes. Also, yeah. To add with that, like the sentiments are good because once again, Kathy Wood, she's a ETF like disruptor essentially. Like, so she's adding in all these growth stocks, companies into her portfolio with her and her investors at ARK Investment. So if you want to look at even if you want to look at the ATF, which you're like, hey man, I don't want to day trade. I don't want to look for a stock that I might hold for 2 days. Man, you can just throw your money at this one, ARKK. This is just going to go higher, and we can even test it out. You see the moving averages are crossing here on the hour time frame. Don't be surprised if this goes above 160 this week.
Which one?
So it can definitely go higher. That's it could definitely go higher.
What is that?
This is the ARK. This is with the Kathy Wood.
Okay.
Yeah.
Which one of the volatility you have? Let me ask you, which one of those you have at the bottom?
The teal one, sorry, yeah, I didn't clarify that. The teal one is implied volatility, and the purple one is historical volatility. So
and what time frame you have it on?
Right now it's on the daily chart.
Okay, and you have ARK.
Yeah.
What's the symbol?
ARKK. Anybody have any questions so far?
Yeah, yeah. Go ahead.
I think the way you analyze Palantir last week was very good. You know, it was very good because that's exactly what happened. But as you know, it's everybody was taking profit,
Right.
and it's a long term thing. So you're gonna go back up. So there's no worries about it.
No.
But the way you analyze it was very good because everything showed that it was going down, and that's exactly what you said, gonna go down. Because what I had to do, I sold some and then buy it at a cheaper price.
Right.
That's what I did on Monday. So I didn't stay up there and let it fall and watching it fall. I sold half of my position. When it come down low, I bought back that.
Good work.
Because I bought it from it was in the 20s.
Nice.
Any other questions about Palantir? So we'll move to Royal Caribbean, which, you know, if earnings was not coming out tomorrow morning, this will be a definite buy. I wish I saw this before earnings. There's this thing called the run up before earnings. And typically this stock does it. I wish I really looked at it prior to. So on the chart right here, and this is another reason why I love Thinkorswim. Really just give yourself a chance. It's a free platform. You can download it. It gives you a wealth of information. Even if you need to like talk to someone from the inside to help you like set up your chart, there's someone there. You know, you can always click. You can always click help for support. You know, you can click. It's so good. So that's my spiel. But anyway, and no, I don't get paid by them, so that's whatever. But essentially, if you look on the chart, you see there's like telephone, and then there's a light bulb. That just means it's a conference call and earnings, right? So that's what it means right here in the background. So on that day, they're releasing their earnings, and then they're going to release, they're going to have a call about it. It happens all the time. So every time that they've had earnings, it ran up, right? It ran up right afterwards, right? Pulled back, ran up right afterwards, pulled back, ran up. All right. So what I tend to harp on, why I tend to harp on understanding the moving averages is because it gives you an idea of where you are in the history of the stock. If you're on the daily, like we are right now for Royal Caribbean, we see that like we're seeing as far back as October of 2019, right? Well, this is September of 2019, right? So we have this red line. We didn't see it on Palantir on this year chart, but we're seeing it here on Royal Caribbean, the 200 simple moving average. When the stock is trading above the 200 simple moving average, the stock tends to be bullish. If it's trading below it, it tends to be bearish. That's why, after, and yes, we had the economic fallout back here, back in March, late February, early March, which is also a historical thing. Stocks tend to fall historically in February, late February or early March. So, the market was frothy during this time. So something was bound to happen. It was just unfortunate what the event was. So that caused a collapse. So, but that tends to happen where you will have a stock now is trading below the 200 SMA. And anytime that is trading below the 200 SMA, it's always going to get rejected. No matter what happens, it's going to get rejected. So, also bear witness to that. The farther away you are from that 200 SMA, the longer it's going to take for the price averages to actually come together. Because once they start to merge and come together, as we're seeing the green and the teal line, the red line starting to come together, what happened when they converge? It spiked. So now that it's spiked, it's now trading in this Wyckoff range. So what we do, or what I tend to do, is when I want to get into a stock and I'm like, okay, well, what price points do I want to get in at? So I start to look for support and resistance lines. So right now it's pretty choppy, and because it is trading in this like consolidation range. But to try to narrow down a real line of support and resistance is going to be really hard, right? So what I do is I say, okay, I'm going to create this line, this imaginary line, just make a line. It doesn't matter how long, but I just want to make sure that it extends as long or far as possible as I see the chart, right? Oops. So I want to extend the chart out longer again so I can see everything, right? So I
How do
zoom
you
in.
get the volume looking thing in the implied volatility? Where that come from?
The implied volatility.
The volume looking thing there.
Oh, I put the volume there. I
Oh,
put
you
it
put
there
the
so I
volume.
can have it. So so I can just consolidate the chart a little bit.
Okay.
Yeah.
Okay.
So I made this general, and it's so hard to like really nail down a price point on this because it does kind of break down and kind of like gives you a fake outs at some places, fake outs in prices. But this, I would say, would be some type of support price, right? So around this $38, maybe $70, $72, that would be support. And that's a wide support price. I don't like that support. So it'll be hard for me to really nail down a price that I was like, okay, yeah, that's perfect to get in on. But why I love this chart is because it gives you all the signs of a technical breakout. The technical breakout here, like I said, this is a general support because it kind of went here, kind of did like a fake out breakdown, right? Because it wants to test this 200 SMA price, which I should get into a little bit. So let me zero in, and so that we can see what happened. So after it made this, convergence of the moving average price here, it spiked up and it started just trading within this little range. But as we see before, it was trading above this 5 exponential moving average line still. So it's still trading above it and goes higher and higher until it can't go higher anymore, right? And this is where we'll use like the MACD, where we'll see, okay, well, the MACD is starting to thin out. That means the momentum is starting to die down. Maybe the price might pull back now. Not sure. If if you have to think about it, and you're not too strong about being in it. When in doubt, get out. Just get out. Like don't frustrate yourself. It's not worth it to lose your hard-earned money to prove a point. You'd be surprised. So that's why we had those indicators. So we see that the relative strength was starting to decrease too, and also the TTM squeeze. So when we see that, we start to see that, okay, well, the moving averages, they cross below. So that means that the price point now is trading below the 5 exponential moving price. And once it starts trading below the 5 exponential moving price, it wants to test this 200 SMA. At some point or another, it wants to test it. We just don't know when, right? And it will try to give us like these little fake outs right here, like it crossed here, right? And we think that we have this strong green candlestick, which is also a good catalyst to know. Strong first green candlestick day. Will it go up? It doesn't. The next day it pulls back, even though, the other indicators are telling us, okay, yeah, it's still, we still don't know the relative strength if it's going to go up higher. But we did know is that it did cross back here and it hasn't tested the 200 SMA yet. So the one time it tried testing the 200 SMA was right around here at $64. So when do we know to really get back in? We really don't know from this point. I wouldn't know to use it. And this is a bigger company at that point. This is not one stock that I would use to get those exponential gains that I've been doing with, you know, VUZI or VERU or with a CLSK. Those have spiked. Those are low floats. Royal Caribbean is not a low float. But when we see the chart and how it's trading, once again, I wouldn't have known that this would have been the ultimate support, because you know, you see where I put my support line. I'm thinking, okay, $68. I might have been one of those people that would have probably bought in right here and then seeing that it's getting rejected and then still come down, and then I would have been out. So I would have had to wait for something, a definite indicator, like something that says, you know what, now I can. And it would have been this strong green candlestick. The first strong green candlestick is by far one of the most powerful indicators that should shift your direction, shift your attention. It's like the prettiest thing on the market when you see it like flash up like that. So when you see something like that, and then you see that, okay, well, the moving averages have crossed. The 5 cross over the 20. The stock price is closed over the 5 exponential. The moving average, or yeah, the momentum cross is giving me some green histograms here, and it's coming over the 0 line, this x-axis. It's not overbought. It's not even overbought yet, like not at all, right? And then we see that there's a TTM squeeze that is, everything is showing bullish indication. Like this green, there's green dots on the 0 line, and the histograms are turning from yellow on the bearish side to yellow on the bullish side. That's now going to start turning to, if I zoom in a little bit more, probably blue. Yep. So it starts to turn this like teal blue. These are strong indicators. Now, I'm not one to buy a stock ever before earnings. I will never ever do that, right? I will never ever say, hey, buy this stock before earnings. So if this didn't have earnings tomorrow, and we were here talking about this stock, and I say, yeah, that would have been a good stock to buy, because it's doing all the bullish indications. It's giving us candlesticks that are trading above the 5 EMA, like we just said. We have it's trading above the 200 SMA. After it tried testing the 200 SMA, the price never tested the 200, so it didn't collapse. It held its ground. MACD, RSI, TTM squeeze. You know, even the implied volatility is still saying this is low, and it hasn't spiked yet. So there's so many indications that are saying that this will spike up higher and possibly retest $85. I wouldn't be surprised if it does go up to $85. But like I said, you know, with this market, stocks have been falling on their prices, you know, once earnings are released. So, you know, if it does fall, let's say it does fall, what we do is we'll zoom back in and we'll try to figure out, okay, well, if it possibly falls, we know that if it's overbought and it's fighting resistance, maybe it will come back to the 200 SMA price. And if it comes back to that 200 SMA price, maybe it'll come back to that 200 SMA price on the hour chart. So then you start looking at support levels down there. So you're like, okay, maybe it can come all the way down to $68. You know, that's where we have our general line of support at $68 a share. If we extend the chart out just a little bit more, you know, if it's trading below, you know, if it comes down to $68 to support, it's now trading below the 200 SMA. And then at that point, I'm not even looking at it. At that point, I've given it away. It's an orphan to me. I don't think about it after that. Until I can find a time that it will find some type of different direction, like Palantir, that will give us some type of different direction to say, hey, we're going to shift the direction because, you know, there's some type of institutional investor that say, hey, I want to get in. It's going to be something that will shift this direction, right? But right now, it's doing all the bullish indications that it wants to retest its previous high. And if you remember at the very beginning of this talk, I said if a stock makes a new high, you know, on its time frame, it's going to pull back, and that's what happened on this hour chart. If we go back to, you know, this hour chart is 180 days. So 108, the past 180 days, the lowest price point was $44.50 a share. It was trading below the 200 SMA, this red line, right, at that time. Once it started to come above the 200 SMA, it went up higher. Yes, it came back down, but when it came back down, what did it do? It came back to test its previous support, $45 a share, which we see back here, right? They even kind of try to test it over here a little bit, and maybe a little bit right there. But yeah, it tried and it failed. It said, no, we want the price higher. And it came back higher and it traded again above the 200 SMA. Yeah, it pulled back once again, and we're going to go back with that whole Wyckoff method, right? Where you see it's clear as day once again right here, where it will go higher, right, from back here when it released earnings, went higher over the 200 SMA, pulled back, consolidated, and then went right back up. We saw, this is a clear example of that W that we saw, right? Should I show the PowerPoint again so you can see it just to make sure? Just right, you see that? You see it's clear as day. So it's like you see that, you'll see that pattern, and it won't be that clear all the time, but it will be clear. It's just that you just have to look at it.
If you have a line chart, you would see it instead of the candle. Much better.
You'll see it. Oh, if the line chart versus the candle.
If you use a line chart, you could see it much better. Exactly like that.
I'm not a fan of line charts. How do I even get the line chart up here? One thing I have to put up. I don't even know how to get the line chart. Hold on.
Appearance.
Is it appearance?
Appearance, yeah. Click appearance.
Is it on the sprocket?
Yeah. The wheel there. Click appearance.
Got you.
And then you change right to your left there, right there. Right we have the change some.
Oh, that's yeah.
You click where else where up there. Yes.
Nice. Oh, maybe yeah. So that yeah. I hate the line chart.
Yeah,
but I see what you're saying though.
Yeah, I was just based on what you were saying a while ago, and it, you know, yeah. Every line chart would give you a good idea.
Well, you see that W. That W is there, right? It's the W hotel. It's trying to tell you that there's a shift in direction. That there will be some consolidation. There will be some type of, you know, direction change eventually. The line chart is nice. I know that like a lot of people on Robinhood use a line chart, and it's hard. Like I'm so used to these candlesticks.
Yeah, it's okay. I was just saying because you show the pattern there.
True. No, you're right. From the PowerPoint. So that's my analysis on Royal Caribbean. Every earnings, they've come up with positive results. If you wake up in the morning and you see that it's at $85 a share, don't be surprised.
It looked good. It looked good to me too.
Yeah.
It looked quite bullish, even though nothing much not going on for them, but it looked good. Looked good to me. Yeah. I think they might still they might be having cruise, but I think they might still be having cruise. No?
Yeah.
I don't know.
Yeah, well, with all the reopening plays and stuff like that, I would.
Yeah, a lot of people buying in. So they see it as cheap right now.
Right.
Correct. So being that Royal Caribbean is up right now, and there's pre-market, and that there's an earnings day tomorrow, should I wait until earnings comes out and then make a decision?
Yeah, I think so.
Always wait before earnings.
Always wait.
Always wait. Like, you know, there's one thing I always say: do not chase because the price will always come to you. You know, there's an ebb and flow that the market has, and that's why I said when you start to recognize the pattern of the chart, you'll see that okay, well, it's going to be overbought if if they come out with these spectacular earnings, right? We haven't even touched looking at what their statistical analysis even says, but even if it does come out and it looks really good, when it's overbought, give it a time, give it a chance for it to come down on the RSI, right? Use the RSI to your advantage. If you're buying a stock when there's a change in color of the RSI, it's going to go higher, yes, but at the same time, you're limiting your reward side and maximizing your risk side. Because now, since it's overbought, it's like an inflated balloon. That inflated balloon is going to pop eventually and come back down. So you want to get it and say, yeah, it came out with positive earnings. That's great. When it comes to technical analysis and fundamental analysis, earnings tomorrow is fundamental analysis. I don't know why I'm having a difficult time saying that. So fundamental analysis tells you what to buy. So they tell you what to buy. The technicals is just saying, hey, these are the price points that you can use to your advantage so that you can maximize your upside and limit your risks on your downside.
And is the same true for the other stock, PLTR? Like it being an earnings day, should you wait on that even though it's on the rise?
No, it's passed already. Passed from last week, Monday.
Correct.
So it's a good time to buy now.
Okay.
It's a really good time to buy now. The moving averages are coming close together. So like
And the sentiment is good too. Everybody talk. It was the number one stock on Reddit last week because of Cathy Wood's involvement and some other rich guys who they came on CNBC.
Correct.
They interviewed her, and what she said was very good. But she says it's not short term. You're not gonna get out if you have to have a long term mentality buying it.
Correct.
But they buy a whole lot, millions of shares.
They gobbled that up.
Yeah.
Gobbled it up. And she's right. Like, as far as Palantir as a company, yeah, they work really well with the actual, government. Like I think majority of their portfolio, like 65% of their portfolio is government contracts. So now it's just them saying during their earnings report that they are looking to expand their portfolio. So when you hear words like that, it gives people like Cathy Wood. And that's why listening to earnings reports are really good, because you do hear keywords, like little things that say, okay, long term, all right, maybe I'm going to wait for it to finish selling off, which it did right here. If you look at the RSI, right, it turned a different color. Like, okay, is it finding support? It starts finding support. You see that it crossed on the MACD, crossed on the moving averages. So now all it's doing now is seeing if it will get rejected by this 200 SMA. So like what I said, anytime when a stock is below the 200 SMA price, it tends to get rejected. So there will have to be someone to come out Monday to say, hey, I don't care who Cathy Wood is. I don't care what y'all think.
You're not gonna get that.
Like, we're pushing this price down, and they're gonna try to, that'll be the 200 SMA pushing the price down.
Yeah, you're not gonna allow that. It's all over the news.
Yeah.
All over Google.
So that's those are the moving averages that I use to really are the technicals that I use to analyze the stock on this price point. So how do I find these runners, these like gappers, like VUZI, low floats? So the low floats really give you more bang for your buck on these. I've traded this a couple of times already. I'm holding a CLN. I'm holding, and I'm going to analyze this chart next. But
which one?
I'm going to analyze a Clean Spark. Yes, we're going to analyze Clean Spark next. But VUZI, another low flow company. So when you're researching companies, you're like, okay, I see this chart, Jermaine, I see this chart. Okay, he told me to look for certain things, right? And we have certain things now, right? We have certain things. We have that the stock crossed on the moving average, right? It's trading above the 5 EMA. It even made a new high. It pulled back after making that new high, but now he has a stronger green candlestick. What's going on? What's up with this? This right here is like one of the best indicators that you can get technically to let you know that a stock price will go up. When you know that a stock price will go up is because of this little bullish indication, right? Now, I didn't think from 1773 that it was going to go to $20 after hours. I particularly don't like that, actually. I don't like that because once it does make that new high and is during a time that there's no access to the market, it sets you up for, you know, the price to pull back. So that's what's happening here, right? Even though I wanted this to happen, I wanted it to happen Monday morning, not Friday afternoon, right? So when it happens like this Friday afternoon, that means now it's overbought, and this is why I use the hour time frame, because now on the hour time frame it tells me, hey, even though you went up to $20, you're extended now. This price point that you can still come back to is $17 on the hour. I don't know if you see that, but it can still come to this teal line. So because it can come to this teal line, that means that, hey, it still has opportunity that it can potentially, you know, test the 200 SMA. I'm not saying it's going to do that because the sentiment behind it is that they have these glasses that are what is it, for artificial reality, and they've been using it for surgery on knees. This is why I was trying. And if you look at it from back here, right, I was trying to buy it from back here. Like, I know this is going to pop. Like, it was just win, and it wasn't doing it for me at the time. So I did buy some options later on and was able to ride some of this wave. But when it comes to this now technical, right, where we have the past resistance of $18 and it can break out, I have no idea where the price point can go now, because there is no overhead resistance. There's like no other price point now that says, hey, even on the hour chart, it said, you know, this is still almost $21. Like it filled up the hour candlestick. So I don't know. It can, like, a company can buy this out. I've woken up to a stock price that looked like this, and I'm like, damn, it's overbought now. So I don't know what's going to happen. And then they end up getting bought out by another company. CPXX was like my first one. It was a biotech company that got bought out by Jazz Pharmaceuticals, and it's just something I had no idea, but I just knew that the chart pattern said that, you know, when you have a strong green candlestick, something good is happening. So, you know, just be mindful of that, but also be mindful of the price point that it extended. So how would you know to even buy this stock? That's what I was getting at. So what happens is that you have to go to FinViz, right? And I even have books up.
Have another site that I want to introduce you to tonight, to one that you can find inside the buy.
Please share. But FinViz is one of them as well. And this is what you look for. Like, technically, this is what you look for when it comes to companies, their numbers, right? How do I know it's a low float company? Because when I come to FinViz and I click the ticker symbol of this company, which is a technology company, or is in the technology sector, and the industry is consumer electronics. When I come here and I look for the float, that means the available shares of the company. I see, hey, this has a relatively low float. Relatively means about 40 million You can see 20 million is a really good low float, but anything below 50 million shares is going to give you some movement. And why is it going to give you some movement? Is because 15% of that float is full of short sellers, people that are betting against the stock. And because they're betting against the stock, what happens is that you get an increase in volume, right? Because people who are in favor of the stock squeeze out the people who are betting against the stock, right? That 15% of this float size, right? So the 15% of that float size is they potentially get squeezed out because we see that the average volume is 4.3 million, but on Friday they traded about 900 million or 900,000 more shares. The volume is increasing, right? So there's something going on behind there. So what you end up doing on FinViz is that you start to scroll down and then see what maybe the analysts have said. Now, analysts, sometimes we don't know what backhand deals that's going on.
Okay,
We
I was
never,
about to say
I don't know. Like a lot of times I don't know.
they get paid.
They get paid. Very good.
Yeah.
I don't know. But you see here, like you can read the news, like they have the smart glasses as in the American Medical Journal. They're expanding the connectivity of the smart glasses. You're starting to see that they're doing the augmented reality. I said alternative reality before.
And one thing I heard also is that because of what happened to GameStop and AMC,
Yeah.
a lot of short sellers are giving up their positions because they don't want the same thing to happen to them. So the short sellers are running for the hills.
So the short sellers are those that that are betting against the stock, like
Yeah,
mentioning, and
they're afraid to be targeted by Reddit.
exactly.
So they're running. So that's why a lot of these stocks going up because they're already in the run, so it wasn't going up.
So if you're on this call and you don't have a Reddit account, if you don't have a Reddit account or if you don't have a Twitter account, you're doing yourself a disservice. You need to have a Reddit account. You need to have a Twitter account. When you go to Twitter, I have Twitter up already. You just type in the actual cash symbol. So for instance, go to search Twitter, type in the cash symbol as mine is still loading. VUZI, this is what we're researching. We come here and see what people are saying. Like, and this is like how you can get a general sense of the sentiment, right?
Yeah.
The sentiment of like, what are people saying? What are the latest talks of this company, VUZI? Like, what are, like, what are people saying? So, is the one I let get away. See, there we go. So,
That's not like me. That's not like me.
So you might get comments like that. You might get some actual so that's another thing. Like when you get people who will send information on Twitter, like really try to see how credible it is. Like whatever article that they're sending you, because sometimes they might just take a screenshot of something and it doesn't really tell you the source. So really try to sort out what the source is. If you hear it as rumor on Twitter or Reddit, try to seek out the source.
As I noticed they say here that I can't see it on E-Trade, but they say there's an unusual action activity for the 30 price.
Oh, wow.
And that's far away. So as I saying, maybe a buyout might in somebody's mind. I don't know why somebody would do that. Maybe you need to check it and see.
So when you have that unusual
30 call, just check it and confirm it and see.
The activity, right?
Yeah, unusual action. Somebody say that here. VUZI with unusual action activity alert at the 30 call. Expired first. Okay, the first month 21st. First month 21st 2020 2022. What worth 140K? I don't know. I mean, need to check that out. Maybe somebody knows something that we don't know.
No, I bought shares in this. I was telling people to buy this on Friday.
Okay.
So that's what I'm saying. Like I bought shares in it. Um, but I just don't know. Like I said, that was the one reason. That was another reason why I bought shares in it, because with options, you know, if I would have bought options in this contract, knowing that,
Yeah.
you know, it could spike during the time that the market is closed. Options doesn't give you a chance to sell your contract when the market is closed. It's only when it's 9:30 that you can actually sell your contract. So that whole, you know, from 4 a.m. to 9:30, you know, I don't know what type of activity, you know, what activity this could have, but I know that, you know, when 9:30 comes, I have to decide what my move would potentially be, you know.
And I think the volatility was too high for you to buy option too. You look at it there.
Facts. The implied volatility is
Yeah,
high.
it's high. So that would be the best time to buy now.
Mm. Yeah. So that's why I ended up buying shares.
Right.
I definitely wanted to test out like this whole implied volatility. Like I really didn't trade that much this week. I did put in some positions. I did trade CLSK, like I said before. So we can go over that trade. Definitely the options chart, so you can see that for yourself, and you can see like how you actually get in and get out. Want to make sure that there are no other. We did talk about Discovery, Dish Network, AMC, Magnite, which was another one. These are all communication stocks. So right now I'm gonna pull up my contract for CLSK or Clean Spark. I have to pull up my notes. So taking notes of, you know, what it is that you traded is always good. You should always have some type of note that, you know, that you made for yourself to show that, hey, you know, this is what I was thinking. This is what I saw. Because once you can backtrack that, it gives you an idea of what you know or what you don't know, you know, because not all of your trades are going to be successful trades, right? So, but you want to limit those trades that are unsuccessful. So here with Clean Spark, I knew that this one was going to go up higher, right? But I started off with a unsuccessful trade, I would say, on this one. This is why I wanted to go over it first and foremost. Essentially, what happens is that when you're trading the options, it looks quite different on the stock price chart. So trying to understand, you know, trying to implement that, I should say, still should have given me the understanding that this price has a potential of coming down. And I say that merely because when we look at this hour chart and we see that this 200 SMA, which is the hour chart line, right? Before, when I got in on this chart, the 200 SMA wasn't there. So these are little things that you want to know trading options. I know a lot of people want to start trading options, but there's going to be little things that you should see when it comes to applying the options chart. So you will have certain time frames that won't tell you these things, but you'll have the candlesticks that will tell you that it's getting rejected, right? You'll have the moving average line that's also telling you that's getting rejected. So this was a trade that, you know, I said I wanted to hold, but I got nervous and ended up selling the very next day, even though I knew it could go up higher. Why did I think it could go up higher? You were about to say something? Did someone say I had something?
Look on the TTM indicate higher.
Correct.
That teal color there.
Right. And this
At
is
the
where
end.
you're trying to still like, you know, not understand, but really apply it in real time. Because in real time, when I was seeing that it was being oversold, all I was thinking was like, okay, let me just cut my loss because I don't know how deep it can fall on the hour chart. And I thought it could go down lower, like because it was already low from the day before, and I thought it was going to get oversold. But as we look on the actual TTM squeeze, it still was consolidating. So I didn't have to hyperventilate and look at, oh, it's declining in price when it still had opportunity of coming up. And, me buying in too soon was one of those things, right? Because I got the fake out breakout because I saw that the moving averages was crossing. But also at the same time, I did not identify that there was resistance here. Because if we go back in time on this options price chart, where it's 325 here, it also did the same thing back here. 325 was resistance. And then if we go back over here, 325 was relative support before it went higher, but now that it was resistance before that. And then, before that, it broke that resistance, right? So, if I had seen that beforehand, I would have simplified myself and not have made this trade. I would have waited a day, right? And that's why using the time frames help, because it gives you a chance to use the day and say, okay, maybe not that time frame, right? So I said, okay, as I am, I'm still learning, I'm still growing, I make my mistakes. So this is why I want to share. So when I said, okay, well, even though I sold this, I know it still has potential going up higher. And yeah, I ended up buying right here, right? Because like I said, after it made that high and it pulled back below the 200 SMA, it was going to trade below the 200 SMA. That's what it tends to do. Now, this chart that you're seeing is 5 days, and each candlestick represents 2 minutes, right? And not 1 minute, which 2 minutes is close to 1 minute. Well, I just want you to see 5 days in total, because when you look at these charts, you want to see the time expanded before you exit, or before you enter, or before you exit. So now I said, okay, you know what? I'm gonna make sure I do the better thing. Wait for the moving averages across. So even though I sold here and it still went down lower, it went down, like 30 more cents lower. I said, okay, it's whatever. I'll buy it when it comes back up. I end up doing something and not catching it at the $2 mark, but I end up catching it at 265. So what happens now is that the moving average is crossed over here, right? Even though it pulled back, a little bit, that was just, people selling off because they knew it was going to go higher, and they sold their positions. So once it continued to go, and we see the moving averages are crossing above the 200 SMA, it was only going to go higher, right? So I end up selling when it did a little pullback. But my biggest thing here is that still it was consolidating. The implied volatility was low. It still had some opportunity of going higher, right? So instead of taking, max gains at $6, I end up selling at $3.90, which I end up always selling sooner than I typically want to, which is something I always just say to sell into the meat of the move. So that's just my mistake, right? I tend to sell too soon, but I rather take profits. So I said I want to put some of that profits to work, and what I'm going to do is I'm going to re-enter into the trade. So I that's what I ended up doing. I ended up getting back in, and then it still ran up. I didn't think it was going to run up still. No, I didn't sell, even though I knew that once it makes a new high, it's going to pull back to the 200 SMA. But at the same time, on Friday, it closed above the 200 SMA. So I'm anticipating CleanSpark to go up higher than $7.50. I know this is the option price chart, so you're not seeing the stock price chart. So as we pull up the stock price chart, and I'll put them side by side so you can see them in comparison.
What time frame you on there?
Now this is the daily chart. This is the daily chart. And we see once again, a CleanSpark. Now, once again, the stock price chart and the option price chart, they look the same, but not all the time they are the same, right? Their candlesticks might be different because their volume is different. Little things are different. The underlying price is different. But understand here, we had that whole Wyckoff method, right? Where it went up higher. And then after it went up higher, it came back down, right? This was the previous high. After it made that previous high, it pulled back, wanted to test the 200 SMA. It didn't test the 200 SMA. It held this support here, holding support, held support, trying to retest, right? Look at that W formation. So maybe tomorrow we get a green candlestick where it engulfs this red candlestick. What did it do? And this is another reason why I didn't sell it, because I said I really want to trust the technicals on this, where it traded above the 5 exponential moving average. Now the 5 exponential moving average on Friday, it traded above it as well. So we see that the price closed above that 5 EMA. Because it closed above that, the the MACD is showing that it's heading in a positive direction. The RSI is not overbought. We see that the TTM Squeeze is showing bullish indication, and that the implied volatility is still below the historical volatility. It still says that there's still upside. This is a low float, clean energy. We know that politically they want the clean energy to go higher. We know that this Clean Spark is also has some investment with cryptocurrency. So because it's in these spaces, and these are very volatile spaces that allow a stock to go much higher, exponentially higher, I can only anticipate that after this indecision candlestick, this tends to happen. We get an indecision candlestick because the stock doesn't know whether it wants to go down or go up. After this indecision, there's usually 80% of the time a green candlestick. That green candlestick shows that it's going to be higher than the indecision candlestick, and because it's higher, it's now engulfing. If it engulfs that previous red candlestick, previous green candlestick, and it kind of is showing some type of resistance against was the price point momentum is going against previous resistance on any other day. We're looking at back in January 14th, maybe even January 8th, showing some type of resistance there. Not 80% of the time it goes higher. It's called the bullish engulfing candlestick pattern. If it does that with all these technicals behind it, it should go higher. So I'm anticipating a squeeze on this one. If it does pull back, I'm only up $10 on this right now. Like after I re-entered, when I sold it the first time, I gained. When I got back in, instead of selling and getting the 300, it was like 300 some profits or whatever, I said, let me trust and see what it does. And it's doing what I said it could do, right? On the
looking good.
Yeah, on the hour chart, it spiked up, right? We get this whole W formation. After it made that high, it came down, consolidated across the 200 SMA, and now it's looking to retest. I don't know. Maybe if it pulls back to $33, I would be out way before that, but I highly doubt that it will pull back that deep. And if it does, then it's just retesting support, which we see that support was held back here. It broke down over here, but there was buyers over here at that support price. There's buyers down here. This is all demand over here. So below $33.
I have a question.
Yes.
When you're buying the options, I'm looking at Clean Spark, and I'm looking at my options on E-Trade here.
Which contract you looking at? So I'm
looking at the March 21st.
March 21st?
March 21st, 26 days. And I'm looking at the spread. I'm looking at that. It's at 36. So I'm looking at 35. The spread is the axis 680. And the bid is 660. That's how you buy an option with with those wide spreads?
Yeah, so So if you've seen anything with the, and I'm just talking in general right now, if you've seen anything that happens with Congress, where they're talking about the market makers and who were those institutional investors who are making money or were not, that a lot of the market makers make the money through that spread. So what happens is that you have that 20-cent spread on this options contract right here. There's always going to be a spread of some nature like this. It's always like this. If it's not like that, that means the price is tightly traded. And if it's tightly traded like that, that means it will have some like upside swings. And that usually happens with stocks that have a higher float, like Ford or GM, Snapchat, which is a stock that people should probably buy soon. If not, I don't know.
Yeah, man, I understand that part. What I'm saying, I know you're an options trader, but I never like to buy when the spread is so far away.
Yeah, that's where
Unless it's like Nvidia, where I know can pass that in a few seconds. I never like to buy it when the spread. I like to buy at least $5 up, maybe $10 apart, but no more than that.
when it's tough because how the option price is totally different than the actual stock price. So yeah, like using the implied volatility, it definitely helps, but also using the moving averages helped me as well.
Okay.
So when I re-entered my position on CleanSpark, I made sure that I followed the technicals as much as possible to get that re-entry. Because I said, if I want to make sure that that the trading strategy works, I got to really test the technicals, and the technicals did everything that I anticipated. So it's just a matter of when the options come in, they will show you that spread, but also there will be times where people will throw in a price. Like there might be the spread between $6, and let me bring this up a little bit higher so you can see. So you might see between 660 and 680, but at the same time, you'll see like someone that might throw in a price that would say like 665 or 675, right? So it gets closer to that close option price. You'll see flashes of that because there are times where people are trying to either buy or sell their contract. But that's the one thing with options that's different from stocks. Like you can't really apply those same stock entry ideas. Like if you want to get a good price, because you can get a price, but if you want to maximize the reward, really looking for the moving averages and what they say was the implied volatility, the historical price, like the price that people think the price should be at during this time frame. So at this time frame, this minute time frame, people who wanted to buy the options contract believe that $6.91 is the price for that time frame. But when you go to the hour time frame, they will say that, where's the purple line? It's still $6.91 is still the price for this contract. So you still get to use, the moving averages. Now it says 687 is the price for this contract. So if I were to buy this in the money call, right? This is an in the money call. So if I were to buy this in the money call, I would still think that it has upside, obviously. But it's the price that you want to get it in at. Maybe you're able to get in at $6.50 because it might do some type of pullback during the pre-market, and then when the market opens, it goes up. Like during the pre-market, it could definitely pull back to $33 a share. It could do that. After hours on Friday, it's trading above the 200 SMA on the minute chart, but when the market opens, it could definitely trade below the 200 SMA and then try to retest support. So let's say that the market opens and you want to get this contract, this 35, you say I'm calling $35, which is at 36. So you're buying in the money. You see that the candlestick pattern shows a bullish engulfing candlestick on the hour chart, right? This is what I want to see on the day chart for tomorrow. I want to see that green, red, green. I want to see that engulfing. I want to see that engulfing here, because if that happens, it's going to go higher. So if that happens, you know, let's just say that 6 on the hour chart, we could say that 612 is the downside, right? So it could still come down to $6.12 on the hour chart. So the 200 SMA is around 520. So let's say that the price does try to pull back to 612. If it holds 632, and why do I say 632? Well, let's say 610. I say 610 because the previous, well, see, it's not accurate. We say 610 on average. Then you can buy at 610, 605, somewhere around there. If it holds that price, then it will go higher. But if it breaks down, that's 610, your downside risk should be no more. Should be really, you should not even, you should be looking at like 560 to be like, that's where the next support line would be. And the reason why I say 560 is because right around here, that's where it held. It held that 560 price right around there, or it tapped it, I should say, right around here, 556, 560, 556, 560. That was previous resistance. It broke that before, went up higher, came back down. So now when we go to, you know, current events, we see that this 560 area broke down further, but when it broke down to test the 200 SMA, it also was a point where you could break through. So it broke through 560 and held above it. So if it holds above this 560 area, you know, chances are you can buy on the upside. So maybe it doesn't hold 610 and it pulls back to 560. Then we're in hot water, because then it can go lower, right? But the sentiment behind it says opposite, because the moving averages have now crossed above the 200 SMA. And that's going to give it a chance to do what it did before, right? Last time it crossed above the 200 SMA, it went up higher for a couple of days. Well, not for a couple of days, but a couple of hours, right? So we're anticipating that it will do the same thing. And maybe it come up to $8.02, right? So you can possibly get from, like, if you get in at 620, let's say 620 is a confirmation price. Let's go, oops, not 5 minutes. 5 days, 2 minutes. We say that this, what price are you? We say that on the minute chart, the 200 SMA price is 624. You say, hey, it's holding 624. Maybe I can get in at that price, right? Maybe if it doesn't hold 624 and it does come to the moving average price of what was that price? Sorry, the teal line. Okay, the teal line is, what price are you? 610. Sorry, I have to bubble that one too. So between 620 and 610, if it holds that price, then you should be relatively good for it to go up higher. Like, because all the moving averages are converging here. And we see that is, you know, it passed previous resistance at 610, 615, right? It's actually holding that price. So maybe it goes up higher, which I'm intending for it to go. So if I were to get in, I would say 610 would be the price, because it's holding that price. But wait and see if it does panic and go below that price. And if it goes to 560, then you know that you can get in at about 580, because you see the price is starting to trend up higher again, because the sentiment is going higher. And then now instead of 610, you got in at 580 and you can just ride the wave up higher. So we'll say like between 580 and 610, like on this contract. Like that would be a good, because there's going to be some type of pullback.
Okay.
There has to be. They're gonna try. But if there isn't, then you know that support was held right around 620, and you can go higher from there.
All right.
Does anybody have any questions? I know I've been rambling, and I tend to do that when it comes to these stocks, and I just want to make sure that like people understand, the trading itself, like because when you follow the chart all the way through, like it gives you these upswings. Like I could show you, all the pretty much my the low floats that have been going these past couple of weeks.
Are they
V
working?
Say that again.
Are they working?
Are they working? Well, they were working, but once they went up, then they pulled back. Sorry.
Okay. I just want to know if it's working. I have a low float scanner, but most of the time when they do come out on this thinkorswim, I haven't, it shows the same on the change gainer. So
Oh,
it's
which
basically the same time.
scanner are you using?
It's a code that I got that I put in. It's a code. I saw a guy on YouTube and he was showing you how to catch a low float.
Oh, okay, I get it.
That white, that guy there, he has very, very white.
Oh, so the chat group. So yeah, there's a couple of us on WhatsApp that we use. If you have WhatsApp, we can add. I know that we're talking about using Telegram before, and I can't remember what was the significant advantage, but I know it gave us a chance to really share more from different platforms, if I remember correctly. James, you there?
Yeah, there's some good groups on Telegram as well that are popping up, and so it's just a good platform to contain, like if you're looking into just this type of research instead of a WhatsApp. There's a lot more professional stuff happening there, and a lot more privacy. Depending on whatever's being said, you might want privacy. But other than that, WhatsApp is fine for sure.
So like I know James sent me the link, so I have to set that up.
Is the app Telegram app, right?
Yes.
Telegram, yeah, look, I set it up with basically I have about, I think 3 or 4 people. I have a good friend in Thailand he's a big investor, musician, and has a lot of everything from crypto to stocks. And then another friend who's heavily invested, and everyone is, they're pretty high level, not too high, but so it's just it's a worthwhile thing. And then another friend who, I got him into trading maybe and crypto in 2017. So we've all been sort of, right now it's kind of personal, but the more that we would get into talking about various things, we're going through different technology right now. But WhatsApp, I think, is fine. I could probably let them join in there if I'm all good with WhatsApp.
So what I'll do, and Fitz, do you have WhatsApp? And I'm gonna download Telegram now. I actually made some space.
It's worth checking out. Like, you could look at Wall Street Bets, their Telegram account. So it's like there is a lot of information being shared, and there's a good history and links, and it just operates really well.
Well, one of the things that I heard in the week is that since the GameStop thing, these institutions hiring now a lot of people to be a part of those sites so they can know what's going on.
For sure.
So they come on it as members to know what to know
Oh,
the
yeah.
sentiments there. That if this stocks that they have are short and are targeted,
That's definitely
that they
going
can
on.
pass on the information. So they infiltrate in all of those groups.
Yeah, and yeah, that is very true.
Yes.
I heard
So
that Goldman Sachs was hiring like a social media investment account, like
right.
first position for people
Yes.
to like look, scour, and see what people are talking about, so they can.
Right. Right.
So like, I'm not surprised. I'm not surprised at all.
But you can set, like, in terms of privacy, you can not, you can have passwords and not let people in. It could be, I guess, the same as WhatsApp. So
Well, all you're gonna know is who. That's the thing.
yeah, well, you will know the numbers or people depending on what's going on, if you want a closed group.
Okay.
But
So
they,
if
they can grow as much as you want them to.
Can you
So
use
it's
video on? Can you use video on Telegram?
I don't think so.
'Cause I know you can on WhatsApp.
Yeah, for sure. You can definitely do it on WhatsApp.
For like,
So for video, if that's yeah, I mean, that is cool. I think during the day, kind of good to be chatting. But I'm only I only started because that was kind of more private, and we have privacy concerns.
understood.
And I'm good with WhatsApp for what we're doing. But I was drawing your attention. It was it's a closed group. We could bring closed individuals in, and it's for discussion, but that's already what we have, and this is totally open.
Can you,
So
can you put the link in the chat box so we can join the group?
yeah, let me figure out how to do that. I'll do that. Another, if people don't necessarily have Thinkorswim, trading view, and even if you have Thinkorswim, the tools that they
yes.
have in tradingview.com is incredible. And good for crypto if you need to look at charts live and all that. It will really be a good tool for people.
Yeah, I went on it. I go on it sometime. But I noticed a guy was telling us about this one here. It's this one that give you the information that you can know what insiders are buying. And it is openinsiders.com slash. Let me look for it again. Openinsiders.com
Well,
slash.
watch the time. I'm just gonna put this on.
Insiders?
Oh, let me see. Yeah, openinsiders.com.
My fingers.
Openinsiders.com.
Sheesh. Hold that one. The domain name.
And it shows you what insiders are buying.
You referring to this page?
Yes, that's it.
Sweet.
Oh, nice.
All the greens there, what they're buying, and they're selling the ones below in the reddish looking color. You can just scroll down and you'll see it. And you can fit in whatever you want. If you want to adjust it, just like Finbiz at the top there. If you want to know if it's CFO, CEO buying, you can you can click when you click whatever stock you're clicking on. You can as a matter of fact, you can fit any stock there.
Yeah,
At
I
the
just
top
put it
there.
in Alibaba. I've seen if I can catch the SEC filings off of this.
You can put yeah, and then you put chart. You can the chart. If you click the chart, you will see whether they're buying or selling.
Years.
You can read all of those instructions and fit in whatever you need. Make adjustment.
I would need to play around with this just to see what I'm seeing. But yeah, I can see that. Yeah. What, this is Alibaba right here? Should be.
Yes, you can. So it show you the buying and the selling there, which one have been and the period of time to your left at the top there. You want to use 1 month, 2 months, 6 months, yearly, whatever. You can put any stock right in that little, right in the top there, and it's any symbol.
So we talked about that. So let me get into some stocks that we'll probably like think should go up higher. There we go. So James just put the link in the chat box.
And they do voice calls on it.
Nice. Nice. So that works too.
Yeah.
Um, so let's start putting this stuff together. Let's see what's one first. What did we say that was on the market? That's going to be happening for earnings tomorrow. Talked about Dish, Zoom Info. Let's go to Magnite. I remember Fitz mentioning this.
Yeah.
This is on
Wednesday.
And once again, hold on. Let's do the research first. Let's do the research. I think it was
MGNI.
Right? All right. So since I'm not too familiar with this new website, I'm gonna go back to this real quick.
Yeah, I just want you guys to know that it's there. So whenever you're ready, you can use it. Take a little time to get to know it, but
MGNI, right? No, it was MGNI. So for MGNI, Fitz mentioned this. I think it was at least $20 or $30.
Yeah.
It was somewhere around here when Fitz mentioned it, right? And we see what it did already, right? Remember when I mentioned the bullish engulfing candlesticks and the indecision candlestick? You can even see it here. Here goes an indecision candlestick, right? I gave a strong green day the next day. Continue to go higher. Gave another indecision candlestick. Gave another green day, right? You can see it on the chart right here as well. It's perfectly laid out. This is probably the cleanest, one of the cleanest charts. And then even here, so this is how you identify breakouts. This is like, when we go through like a systematic of events, we're looking at like little clean breaks like that. That's what we want. We want to see a clean break like that. So we see that the price always breaks the previous resistance. So it went up, came down. If you wanted to get back in, you probably would have got back in here because it's going to retest here. It has to retest this price, break higher. So, but that's it. All right. So once again, this stock is not a low float like typically, like I would normally like the 30 million, 20 million, but it's a good size float. So that means it's going to have a wide range of movement. It's also a low. It has a higher float, so a higher shortable share float at 11%. So we're thinking about like at least 1 million, maybe the 10 million of this float. 10 million of this float size are people betting against the stock, right? So that's roughly 10%, maybe 12%. So this is roughly 100. So we could say that the 10% of that's of 100 is 10, right? So we got 10 million. So we say about 10 million shortable shares. And out of that 10 million, what's going on with the volume? We see that the average volume is 5, but the volume is a little less than average on Friday at 3.1 million. What happened? We don't really care what the analysts say, but we're just thinking, okay, what are the analysts saying? Whatever. We're like, what are they saying? Okay, $40. Okay. You said you buy, hold, maybe 37. Okay, 45 maybe as a buy. So, all right. So we're looking at it. We're seeing that there's some news on the bear case in this base list. It's coming without merit. We're looking at just kind of the headlines, just kind of just get an idea of what is being said about this stock. Saying, okay, path to profitability. Okay, we see that the stock has been uptrending. We've seen that the stock rise 20%. And we started to start taking notice, like, okay, well, what industry is it in again? Okay, advertising. What's going on in advertising? Yeah, maybe that might give a clue, but we know it's in communications as a sector, right? So maybe we scroll all the way down and it tells us that there's an insider buying or selling. All right. So we see that all the way at the bottom, we see that the CFO and the CTO, they might have sold some shares. So it's like,
Taking
okay,
profit,
why is it
taking
selling?
profit, man.
They're taking profits, right?
Remember when we talk about it, it was 23, and that's about 2 months ago.
Facts.
I'm
So
looking at it now. You remember the picture that I show you there? It
which
was like
picture?
when remember I show you when I always show you know they all everything curve up, the stochastics, the RSI, the TTM squeeze, and it had a bullish green candle there. Remember I
Yes,
show you one there and right out my nostril there. Remember we showing you?
right. You want
Right.
to the chart?
At
You
that
want
time it was 23.
when you pull up the chart so you can see?
Yeah, and at that time it was $23. So it was 23 that time, and now it's now 53, so it's more than double since. So I think they're gonna take some profit.
And they definitely took profit. So I think the time you probably mentioned was like right around here. It
20,
was, yeah,
it
it was
was
like sometime in January we mentioned
23.
that.
I have the picture right here, and it says 23. That it was 23 that time. $23.
It was $23.
Mm-hmm.
Yeah, so that was
23. It was
yeah,
23, 25.
December. But either way, like we see that all the moving averages were saying that it was going to go higher. Well, all the technicals were saying it's going to go
Mm-hmm.
higher. Bounce off the 20 SMA. It just continued to trade above the 5 exponential moving average. So when do you buy and sell based off of the daily chart, right? On this one, like doing another analysis, like what we did on
Palantir.
Palantir, like what we did on Royal Caribbean, like what we did on CLSK. Like where do we buy off of this, right? We see that it closed above the 5 EMA, and they have earnings, right, on Wednesday. Do I want to buy before earnings? You know,
Uh, no, I
so
see they say Riley raised price target to 66. But I think they just do that. That when you're buying, they can take profit.
exactly.
That's what I think they're doing.
Like I wouldn't be surprised if it sometime during the pre-market or after hours it came down to like to
Down
the
a little
$40
bit, yeah.
area, $50 area, because their earnings are being released. I think he said before, no, after hours on Wednesday.
Oh.
So because of that, right? You could, like, let's say that we wanted to day trade it.
Mm-hmm. Yeah,
Let's say we wanted to day trade it.
catch the volatility.
Yeah, we just catch it. So this is the run up before earnings that tends to happen.
Right.
So before earnings, we see that the whole setup on the year chart showed bullish indication, right? There might have been a slight pullback. There might have been a slight. There might be like some pullback here on the MACD, so that will give me some caution because I'm saying, okay, the momentum is starting to slow down, but it's still not overbought. But the TTM squeeze is also signaling that, all right, well, the momentum is still kind of lowering down, but the volatility is still the implied volatility is still above the historical volatility. So it's starting to give slight slowing down. It's still bullish, but it's
Yeah.
showing that it's slightly slowing down.
Right.
So this $48 price point might not be too bad if it does come down to that,
Yeah.
right?
That would be a good buy there.
Because it might pull back to that price point after earnings. But if I were to say, before earnings, okay, what's going to happen? Well, all right. Well, right now from Friday, we look at this hour chart long term. We see that it is trading above the 200 SMA on the hour. We see that it has made a new high, and it attempted to trade to the 200 SMA. So with this strong candlestick on the hour, it's showing that hey, it might have some possible upside. Maybe it breaks this 59.45 price point, which it tested over here and over here and was resistance over here. So it might test that price point, which it did, and it held it. So now the next price point it wants to test is the 62, which is up here. Now, if by chance on the hour it tests at 64, when the market opens, so let's say that market opens at 4 a.m., someone from Webull is going to buy. This price is going to be taken out. It's going to be like $65. Now, what we're waiting for is for when the market opens to see the price point come back down to test the 200. Well, first to test the 20 SMA and then to see if it tests the 200 SMA because that's what's supposed to happen. If it does do that at 4 or 5 in the morning, 6 in the morning, even at 9, right? Let's say it happens even at 9. If at any point that it makes that new high, you're just going to have to wait for it to pull back if you want to get in on the price, and then maybe you can short it. But it going up after making a new high, it will probably only occur until 12 p.m. And why I say 12 p.m. is because stocks that do make these new highs on the hour chart or on the daily chart, what they do is that they will continue to increase in price until roughly about 12:30, right? So they might have some pullback at around 10 during the 10 p.m. hour time. So if we zoom in on this chart, right, from its first initial increase, and we look at each time frame, each hour, right, it went up high, right? We see that it pulled back after being overbought. And even when it pulled back, it still was trading above the 5 EMA, and it continued. Even though it was still overbought, it was still trading above the 5 EMA each hour until right here, this 9 a.m. hour, it was saying that, hey, it's still fighting, but still trading above. It closed above the 5 EMA, but it wanted to make a new high. It made a new high at 12. I didn't even know that. I'm just finding that out right now. That's what I'm saying. These things happen all the time. It's the same thing. So at 12, it already showed some positive upside. So by 12:30, it's going to want to start pulling back. It's like extended as far as it can go. I didn't even know that it made a new high at this time. Really, just finding this out right now. So now that it pulls back, it's going to pull back, cross below the 20 SMA, and then it's going to start trying to test the 200 SMA. And we see it's fighting, but it's getting weak. And we have all the other technicals that are suggesting that it's getting weak, right? Even right here on the TTM Squeeze, it's saying that it has an opportunity to trade below the zero line, even though it was showing histograms coming up here on this day. It's still a fake out breakout. They're faking us out, thinking that it will go higher, but just fights resistance and comes back down. So, then you can just cut your losses because now everything is showing that it's going to go lower. It's trading below the zero line on the x-axis here. And then, it's trading close to the being oversold on the RSI, and all the histograms are below the zero line on the TTM Squeeze. So now it's like time for people who wanted to buy in. Once it's starting to sell off, these are people looking like, all right, it's selling off. Now it's starting to time to buy in, we start to look at it. But now I'm still looking at the historical and the implied volatility, and the implied volatility is higher than the historical. So I don't even know if I would still want to buy this, because the implied, to get the best price, and this is what we're talking about on the options price. If we're buying on the level 2, we see that spread, that implied volatility is going to tell us that what price is the best for our buck. On the hour chart, they're saying that right now the price is not the best. It's close to historical, but it's a little bit higher than historical. So you don't want to buy above
Options.
on the options. Yeah, you don't want to buy the
Yeah, on
options.
my options and then.
Yeah, the options. But the
Uh,
share price might be good, right? So
it's a little expensive now. Maybe I would rather to see the earnings first. But the fact that they doubled since about 2 months, 2.5 months ago, it, that says something. A lot of interest in it, though.
absolutely.
It's the fact that it more than double because it was 23, so the 23 plus 23 will be 46, and now it's at 50, 58. Wow, about 2.5 times, almost 2.5 times.
Like
I mean, almost 1.5 times where it was.
when you showed that breakout, I think when you said it was at 23, like when
Yeah,
you like that was a perfect example of
yeah,
what type of breakouts we're looking for,
yeah,
right? I'm waiting for this thing to. There we go. So let's if we were looking at the chart, right?
yeah.
We don't see. We're looking at it today. We're looking at this chart today, and we're like, okay, should I buy this?
Right there, right there, right there, That's how it looked,
Right.
right there.
So this is the candlestick pattern
Mm-hmm.
that always will. I wouldn't say always. 80% of the time is
Yeah,
going to break out.
the breakout.
You see this pattern, like you should screenshot this. You see this pattern on any stock, especially if they're a low float, especially if they have like a nice amount of volume going through, especially if they have earnings coming up, especially if they have some bogus PR that's pumping the stock. If they have all of this and then the technicals are behind it, this is a buy.
Yeah,
You know,
I have a picture of it right now. I'm not, I keep to use, and I use it when I'm looking at others.
see? And then even if we look at this bullish engulfing candlestick here, this is that indecision candlestick that I mentioned with Clean Spark. We have it here with MGNI. And then next day, strong green candlestick.
Mm-hmm.
Next day, it's still trading above the 5 EMA. Continues to trade above the 5 EMA. It may be reasonable, like, hey, you got out here because you saw that it closed below the 5 EMA. That might be reasonable. Okay, I understand that. But also, still watch it. Still watch and see if it holds the price at the 20 SMA. Maybe it'll hold support. It was holding support at $18. And then once we, go a little bit further, we see, it almost pretty much gapped up and continued, right? So, and it's good when you see it from like after the trade has already happened and you come back to analyze it. That's where the nuts and bolts of trading really happens. When you're looking, like, this is not an easy game. Like,
Mm-hmm.
I know that there's some people that jumped in and they want to get in on like any of the chat groups and stuff like that, but it's not easy on getting in on stocks. Like, I wouldn't say getting in, but being patient and knowing that you now allowing your emotions to get involved. Because if you're in it to think that you want to get daily gains tomorrow, best believe that it's not a guarantee, especially if you're not used to or comfortable with making an entry and getting out of your entry, making an exit. Because if you don't have a plan to start with, then all of what I'm telling you is not going to be helpful. Because so you have to have a plan getting into a stock very first and foremost before anything else. Because at that point you're just gambling.
Mm-hmm.
Oops, that's not what I wanted to do. At that point you're just gambling, and I don't want anyone to ever just be gambling, trading on the stock market. Does anybody have any questions? Please